Hey, Kamir, I got to tell you something. This is really not going to be very easy for me to say, but I think your 401k might be robbing you of hundreds of thousands of dollars. There's some things in the fine print that you're going to want to know about that could literally mean almost half of your balance could be gone. Welcome to the channel. My name is Paris Clough, and this is Financial Self-Reliance. I absolutely love helping people manage, protect, and grow their money. I would love it if you'd hit the like and subscribe button, especially if you get value out of this video, so that the channel can grow and the word can get out so that we can have more people that are financially literate and financially self-reliant. All right, so from about 2015 to about 2017, I worked for a firm where we would evaluate 401k plans. We would go through all the details of all the different paperwork and the nuances, and we would find all the fees and the hidden fees and all the different things that were going into that 401k plan. And then we would help those employers develop a plan that was more effective, more efficient. It was typically about half the cost of what it was before, because there are some fees that are involved in every 401k plan that you're going to want to know about. The first of those fees is a record-keeping fee. Record-keeping fees are fees that are typically paid for by the employer, but they could be paid for by you, the participant. It depends on how generous your employer is. There are several employers we found that are passing that fee on to their participants, sometimes without even knowing it. Another fee that's hidden in the fine print are all the administrative fees. Now again, these fees might be paid for by the employer, but often we find that they're paid for by the participants of the plan, meaning that that's eating away at your investment results. And last but not least, the investment fees themselves. To manage the funds that you put your money into, there's a fee, there's a cost to that. It's called an expense ratio or an investment fee. And there are different ways that these things are calculated, and all of those fees add up to an amount of money that's eating away at your gains, at your returns, at the interest rate that you think you're earning. It's actually being eaten away by these fees in the 401k plan that you may or may not even know about. There's actually a book out there that keeps track of the average fees and the costs for 401k plans. It's called the 401k Book of Averages. And what we found was that the average fee in a small company 401k, now a small 401k is 50 or less employees, with $500,000 or less in total money in that 401k plan. So if you're working for a company and you have a 401k plan and there's less than 50 employees and less than $500,000, then this average fee is probably going to be eating away at your investment returns and your investment gains every single year. And that average for that particular size is 2.19%. 2.19%. In a minute, I'm going to share with you actually on a calculator how much that affects your overall returns. But I wanted to also give you, in case you're somebody watching this and you have more than 50 employees and you have more than $500,000 in total assets in your 401k plan. Because what happens is the bigger your plan, the more employees, the more participants, the more money that's invested in there, the lower the fees start to get. In fact, it was shocking to find out that even smaller plans than the one I just shared, the average fees are over 6%. Now, if you're only earning 8 or 9% and 6% of it is fees, that's gonna completely eat away at your potential investment gains. And you're not gonna be able to retire with enough money if you have those kind of fees in your 401k plan. So if you have a 401k plan at work and you don't know what the fees are, it's time to do some homework. It's time to dig in. In fact, I have a very good friend who would be willing to investigate for you and help you find out what the fees are for your plan, and maybe even help your employer get a better plan so that you guys can have lower fees and have better investment results. So in this book of averages, the next level was 50 or more employees and $2.5 million in assets under management, or total dollars in that plan. That was an average of 1.34. So much better than the 2.19 and significantly better than 6%, but it's still a pretty high average, 1.34%. Now, I'll be honest with you. A lot of you out there are super excited about a company match. You know, you put in $100, the company will match that $100, so $200 goes into the plan. Well, the reality is that now you know that a significant amount of that $100 of the match is going to pay for the fees that are actually being charged against your account every single year. So I'm sorry to break the news, but now the match may not be as exciting as it once was. So if you work for a company that offers a 401k, if they have a matching program, you're probably going to be okay, but you still want to know what those fees are. You still want to kind of really get an overview of what all the fees are. Some of them will only disclose to you what the investment fees are. They won't tell you what the record-keeping fees or the administration fees are. So it's important for you to know what the whole overall bundled fees are, and then ask your employer who's paying those. If the plan is paying for them or if the employer is paying for those fees. The one set of fees that you're always going to pay for as a participant are the investment fees. And those are the fees based on the different types of investments that you choose. Whether you choose to have a fund or an ETF, or whether you choose to have a target date fund, the fees for those, the expenses for those are going to be dependent upon what you end up choosing for your own investment strategy. However, the record keeping fees and the administrative fees, those fees, you should probably talk to your employer about those ones. So what I'm going to do is I'm going to share with you a calculator that's going to show you in dollars and cents how much money you're losing by having these fees in your 401k, and how much money these 401ks are really charging you, and what your balance could be versus what it probably will be, depending on what investments you have available to you and the different fees that you have. Remember, the bigger the plan, the more participants, the more money, the lower the fees. And the lower the participants, the lower the money involved in the plan, the higher the fees. So you're going to have to do a little bit of homework after this to determine what the fees are for the 401k plan that your employer is offering to you, and if there's a match or not. All right, so let's take a look at this calculator. So let's say that you're 25 years old today, so you have 40 years to go, and you want to earn a rate of return in the market that's probably the average. So let's take a look at Investopedia. Investopedia says the S&P 500 has had an average annualized return from 1957 through December 31st, 2021 of 10.67%. So we should at least be able to use that as kind of a standard for what we should be looking forward to in our investment accounts. So let's go over here to this investment calculator and let's type in 10.67%. So if you invested $250 a month that was compounded continuously, and you had at the beginning of every month, you would have $1,987,593.94. That's a nice chunk of change. So if you're 25 years old today and you have an opportunity to put away $250 a month, you're going to want to put it in the S&P 500 or something similar so that you can have an ending balance of almost $2 million. So if you're invested in your 401k and you're invested in a fund or an ETF that tracks the S&P 500, you should expect to have these similar results. However, the average fees for a participant in a plan with 50 or more participants and less than $500,000 is 2.19%. So let's take that out. Let's get my calculator. 10.67 minus 2.19 equals 8.48. All right, so let's take a look. $1,987,593. Now we're going to put in here, because all you get to keep is the growth minus the fees. So your net is going to be 8.48. That's all you're going to get, because the fees are going to be taken off of that 10.67. So now let's see what you have. $1,019,821.67. Still a fantastic balance, right? But that's almost half. You literally just lost half. $970,000 was just lost to fees. So you tell me, are 401ks robbing you of valuable investment returns? I think so. So what can you do? Well, if you have a company match, rest assured that that company match is going to take care of these fees for you, at least in part. The company itself should be taking care of at least the administrative and the record-keeping fees, but all too often what my friend and I have found when we used to help companies was that these companies were inadvertently passing these fees on to the participants. So if you're a business owner or if you're a participant in a 401k and you'd like to make sure that your fees are as low as possible, make sure you reach out to me at hello@financialselfreliance.net within the subject line something about 401k fees, and I'll make sure to get in contact with you and pass along your information to my friend so that he can help you reduce these fees in this 401k plan. So do you understand how important it is to make sure that the fees and the expenses that are being charged against your account, to making sure that those are as low as possible? Most employers don't have any idea about what the fees are and how they're being calculated or how they're being paid. So make sure that your employer knows what the fees are in your plan so that you're not paying the fees when you shouldn't be, so that you can make sure that you're getting the most out of your 401k plan and getting the results that you're really looking for. If you have your money invested in the S&P 500 inside of your 401k plan and you've got fees that are 2 or 3%, you're going to have a much lower balance than you might think. So make sure you do your due diligence. I think it's time for you to find out whether your 401k is robbing you of almost half of your potential investment gains or not. If you missed the last video I produced, you can catch it here. Go ahead and subscribe to the channel up here and check out this video that YouTube thinks you might like. I hope you got a lot out of this video. I hope you have a great day, and I look forward to seeing you on the next one.